BPR was a very interesting bank that was set up as a cooperative bank, like your neighborhood bank. One of the things that followed after the core banking system upgrade was really how do we meet our customers.
BPR, Rwanda, and KCB became one entity. Tell us about the merger.
The fact that we still have the largest branch network across Rwanda, we're able to provide services that reach places that many other banks are not able to reach. Currently, we have over 1,200 agents. By the end of this year, we'll be at 2,000 agents. We're increasing that gradually. Apart from that reach, I think we have an advantage that no other bank has, in the sense that we have over 500,000 local shareholders. Being part of the KCB group, we're in 7 countries. We are the largest financial player in the region, the biggest balance sheet. And so what that does for us is that we're able to do huge transactions, not only in Rwanda, but we're able to leverage the balance sheet of our bank across the region.
Do you believe that the love and hate relationship is actually correct?
I really, really wish we could set aside, and this is something hopefully as we go along, we should be able to do. Set aside, even if it's 5% of your portfolio, and say, we want to take a risk on startup. Internally, we are in the process of setting up an innovation department that's just going to think about how, number one, internally we can improve our efficiencies. Number two, how we can serve our customers better and have more customer-centric innovation.
If I was to speak to 3 team members who work very closely with you every day, what's the word that they would use to describe you? 3 of them, 1 word each.
I believe that if you're going to have a culture change, repetition is unavoidable. You're going to have to repeat your message over and over and over again.
Where are you going?
Development actually is a thing I'm very passionate about. But for now, it's really building BPR to that level where I can know, I left a good legacy.
Patience, welcome to the podcast.
Thank you. Thanks for having me, Yusuf.
Yes, we've been trying to do this for a while. I'm glad we finally did.
Finally.
Yeah.
To be here.
Yes. So recently, a couple of years ago, BPR, Rwanda, and KCB became one entity. At least KCB Rwanda, right? Tell us about the merger.
Yeah.
Why? And what does that mean? And how has it been?
Yeah. I think this has been the most exciting years for BPR as a bank. Like I said, I was explaining to you the history of BPR. BPR was a very interesting bank that was set up as a cooperative bank, like your neighborhood bank. Actually, initially, it's like a group of people in neighborhoods that would come together and raise capital and set up a bank in the neighborhood. So it came up as the 3rd bank in Rwanda. So at the time, I think they all came together in 2007. There had been over 400 bank populaires that had been set up across the country. The initial concept came from a village called Nhamba in Rwanda. But slowly the concept spread across the country and we had so many bank populaires. So the government came in and said, it makes a lot of sense to digitize these things and put them together into a bank. So they put up what they called, they brought them together into what they called Union de Banque Populaire. And in the process of formalizing it into a bank, they realized, we need to put structures in place. We need a strategic partner in trying to formalize this into a solid commercial bank. And so Rabobank came in. And the reason why Rabobank came in was that in Europe, it was a really strong agriculture bank. So Union de Banque Populaire was set up with a mandate to increase agriculture financing in Rwanda. So that's the history from 1975 to 2007 when Rabobank came in as the first strategic investor. And then from 2007, the journey has changed for Banque Populaire. We had Atlas Mara coming in 2016. So Atlas Mara acquired shares from Rabobank. Atlas Mara stayed in Rwanda until 2022 when they then sold to KCB. So KCB Rwanda had been set up KCB Group had been in Rwanda since 2008. Also, a fairly rich history. Um, KCB is a very old bank. It had been set up, I think, in 1893 or something like that. A very old bank in Kenya. Very rich history, and they were expanding within the region. So they set up a greenfield in Rwanda in 2008. So the business grew. Bank Populaire, from the history, was a retail bank, an SME bank, agriculture bank, the bank of the people. And then KCB was really a corporate bank. And so when KCB was thinking about which bank to when they were thinking about the expansion plan in Rwanda, there was no better partner. Bank Populaire was that bank that they wanted to partner with because they wanted to get into retail banking and SME banking. So the two banks became one in 2022. 2022 is when the merger happened. It's been a journey since. We've embarked on huge projects, some very challenging, in fact, most really, really challenging. So that's kind of the history that we've had. In terms of the merger, some of the big things that we've done is we brought together our core banking system, T24. So both Bank Populaire and KCB were running on a core banking system called T24, but different versions. So we brought the two together, integrated them, and then upgraded to a more modern, sophisticated system called, still T24, but version R21, which is really the latest that you'll find in Rwanda. We've also done a lot on digital transformation, on people transformation, culture transformation. So it's been a really interesting journey. I joined the organization last year, February 2023, and a lot of experience to share, a lot of learning on the journey. I've really enjoyed it.
Yeah. No, I could imagine. Why didn't you, since the oldest is KCB, why didn't you just continue being called KCB? Why did you retain?
That's a really interesting question. During the process of the integration, one of the things that became very clear, and everyone knows this, the brand affinity, the love for the brand that is BPR. So that's something that we did not want to lose. It was very, very clear that we wanted to maintain that love for the brand, which is still there. There's been a few things that we've done to bring in that blend between BPR and KCB. So when you look at the brand, we still have BPR, but in terms of the colors, it's KCB color. So you can see that there's a KCB there, but we're still BPR, the bank of the people, really loved by our shareholders, loved by our customers, loved by our banks. So we wanted to keep that brand affinity.
Yeah. No, I've definitely seen that. As I was telling you that I've been a customer of KCB, and then I found myself into BPR.
What was that journey like?
The journey, that was interesting. I mean, I became introduced to KCB almost by accident. So I was working with a friend, on a different project, and then he was using KCB as a bank, and I just felt like it was very easy to use and it was interesting. And then when I launched a new business, I was like, okay, let me just go with KCB, right? That's an interesting bank that I've been using in the corporate world. And then started using it, which was really smooth. And then I think I learned about the merger. I think for a couple of days there was a bit of confusion because you would download the app of KCB, but then you wouldn't really transact easily. And then you would need to go back to the bank, and they would give you a different version of the bank. So it was a bit rocky. But then what I appreciate is that the internet banking that you guys have set up is really, really, really is definitely the best, right? It's the best in the market. Super smooth, being able to use it, integrates with mobile money. If I put a number of a person, automatically shows me the name. So good, right? I saw that, I was like, yes. More banks should do this.
I love you. Right. Thank you. And thanks for being a customer of the bank.
Yes, I absolutely love it. I wish maybe you could share more about with other people, with the market, what you've done in terms of making the user experience as smooth as possible. Was that something that BPO was already working on, or was that something that KCB brought to the table, or was it because of the merger you were like, okay, let's build an amazing internet banking?
As a bank, we exist to thrill our customers, and I know we're still, in some instances, it's a work in progress. one of the things that followed after the core banking system upgrade was really how do we meet our customers where we are and limit the number of times that customers need to walk into our branch. And so one thing we wanted to focus on, and it took us a while to get to that level, was our omni-channel. So the omni-channel is a combination of, internet banking, mobile banking, but very many other services, which are still a work in progress. So we spent a lot of time trying to develop the internet banking platform and the mobile banking platform, as well as improving our USSD experience. So it is something that we had been planning for a while from the upgrade of the core banking system, and we intend to keep expanding the number of services that you can receive on the internet banking. So that feedback is really interesting, very, very useful. The mobile application as well is being improved. We have received feedback that the customer journeys are still a bit lengthy, so we're in the process of reducing that and just making sure that the experience is more holistic than we don't want people to be getting into mobile banking and you're only sending and receiving money. We want it to have a value proposition that is rich and wholesome for our customers. So we're in the process of improving the user experience on our different channels.
Yeah. No, we're very excited about that. What do you think is the bank's competitive advantage right now? Banking is very competitive, right? But what makes BPR stand out?
That's a really good question. So when we look at our branch network, and I know that you being into the fintech space, branch network is really not the future, right? But I think for our market, the fact that we still have the largest branch network across Rwanda, almost every district, we're in every district, like let me just say, we're in every district in Rwanda. So for customers who, for example, tea producers or coffee producers who you have a factory in one location, but you have farmers spread across the country, we're able to provide services that reach places that many other banks are not able to reach. We're also expanding our digital channels. We're expanding our agency banking network. Currently, we have over 1,200 agents. By the end of this year, we'll be at 2,000 agents. We're increasing that gradually and hope to get to about 3,500 next year. We are expanding our merchants across the country so that we can make payments easy for our customers. But back to the competitive advantage, I think apart from that reach, I think we have an advantage that no other bank has, in the sense that we have over 500,000 local shareholders. And when we think about our local shareholders, they're not just shareholders. These are also really established businesses. It's business people. So those come with their own value addition to the bank. When we think about, how easy it makes it for us to serve them. So that's a value proposition that we're really keen on expanding. I don't think we have fully utilized the value that comes with this large number of shareholders. And then we have our reach across East Africa that is very rich, right? Being part of the KCB group, we're in 7 countries. We are the largest financial player in the region, the biggest balance sheet. And so what that does for us is that we're able to do huge transactions, not only in Rwanda, but we're able to leverage the balance sheet of our bank across the region. But also very related to that reach is the fact that we're able to facilitate cross-border trade in ways that no other bank can. So Rwanda is a landlocked country. We do a lot of trade. Importation comes through Mombasa, Dar es Salaam. So a trader can be sitting in Kigali or even in Muhanga and walk into our branch, make a payment, and their truck that is in Dar es Salaam or in Mombasa can be loaded and come immediately. So that reach helps us to help in payments across the border. And so it also helps us to contribute towards enhancing cross-border trade. So there's so much more, but I would focus on those 3 as our key competitive advantage.
Yeah. How did you get into the financial sector? What's your journey to getting here?
Very interesting. And let me be honest with you. It wasn't like, oh, when I grow up, I want to get into financial sector. No. Um, so I went to school. I did my bachelor's degree in quantitative economics. So a lot of numbers. So when I finished, obviously my mind went to what next? What is it that I want to do? And at the time, I think it's still the case. The financial sector is one of those big employers. So my immediate opportunity actually didn't come up from a bank. I got into a microfinance, a job that I really, really enjoyed. Because I came to Rwanda for the first time, not for the first time, it was probably my fourth time. But before that, it was short visits because my family was here, but I was studying in Uganda. So I got a job in Uganda in a bank, and I came home to tell my parents I was going back and, I'd stay for a longer time because I'd got a job. And then when I came to Kigali, I attended a wedding, which I really enjoyed. I saw nice people. I felt, connected to people.
Yeah.
And just went back to Kampala, packed up my bags, didn't show up to the job that I got, and decided to come and settle here and, look for a job. The first thing that came up was in a hotel. I was there for a very short time, and then I got a job in a microfinance. Loved the job so much. And what it showed me was the love that I had for small businesses. Because at the time, my position was micro corporate credit officer. Very long title. Micro corporate credit officer. So what we used to do is give loans to small businesses. And believe it or not, the maximum loan we could grant was 1 million francs. So you can imagine my typical customers. So that job got me to go into, places that I would never have gone. I'd just go into, places I wouldn't go normally, right? But it really helped me to relate with people, to sit down with small business owners, look at their books, because that time we're teaching them bookkeeping, how do you register, the materials that you're bringing in, when you sell, how much profit are you making? So we managed to walk a journey with these small businesses. Really loved the job, but I didn't last long there. And the reason is that my boss at the time told me she thought I had outgrown the job. She thought I had outgrown the job because I guess it wasn't as challenging. I was enjoying it very much, but I guess I wasn't challenged. So then I got a job in a bank. At the time, BCR, now INM. Went into marketing. Didn't enjoy marketing very much because I wasn't dealing with customers directly. I wasn't dealing with numbers. And so I was there for a short time, went into product development, enjoyed that quite a bit. But then really my heart was back to how do I work with people? How do I work with small businesses? So I went into SME and corporate banking, and kind of just my career grew because I think I was in an environment where I thrived. And I thrived because of, I guess, two things. Number one, I really, really enjoyed working with customers. And I believe that when you're enjoying working with someone, they will see it, they will feel it, you'll make an impact. And those are the same people who go talking about the positive impact that you've had on their businesses and on their lives. So I think I had very many people promoting me unknowingly. So I really thrived in that space. And number two, because I really love to solve problems, right? If I have a problem, I will not sleep until I've solved that problem. So that also really helped me to serve my customers well, to solve problems that looked big for other people. But for me, it was really the satisfaction that comes with solving a problem. It's just amazing. So then that was BCR. I was there until 2011. I left when I was the deputy head of corporate banking, got poached, which is, I think, something that happens in banking more than anything else. Got poached to go to kind of set up corporate banking for EcoBank.
Okay.
So I went to EcoBank as head of corporate banking in 2011. I hope you're not thinking, how old is she? So set up corporate banking in EcoBank, really enjoyed that as well, grew the portfolio. And then 2012, I had my first child. 14, I had my second child. And then that time, I think the work-life balance became very difficult. And also I was clocking, I think, an age where I was reflecting on my life. Is this everything I want to do? Because that was basically, I had known banking my entire career life. And I thought to myself, what is it that I can do differently? I thought, did some reflection, thought I'm very willing to take a step back in my career, but do something completely different. So 2016, an opportunity came up, which it wasn't taking a step back in my career at all. It was actually a step up. An opportunity came up to lead Trademark East Africa, which was an aid for trade organization, which was doing fantastic work in facilitating cross-border trade. So although I was not working directly with businesses, we were facilitating the private sector as well as the government to remove barriers to trade and improve the competitiveness of the private sector. So went in to do that, did that for 6.5 years. And then while I was there, I joined quite a few boards, including BPR, which I really enjoyed, getting back into banking. So while I had kind of run away from banking, coming back on the board reminded me how much I really enjoyed banking. And so when the opportunity came in to lead the bank, because one of the things that KCB did, which I think was wonderful, was they wanted to localize almost everything, right? So most banks that are international, regional in nature, people usually question their independence, right? KCB did not want that. They wanted, decisions to be made locally, and they really wanted the bank to be led by a local. So this opportunity came up, I took it up, and it's been almost 2 years since I've been doing that. So banking is in my DNA also. My mom was a banker. My sister was a banker. My brother was a banker. And I come from a family of 4 kids. So 3 of us, 3 out of 4 were bankers. So it's in my DNA. It's something that I really enjoy. Very stressful, but that has been my journey.
Yeah, and I can imagine. Very rich journey. Some of the things that you kept talking about, SMEs, you talked a little bit about farmers in the beginning as well. There's this thing that we as entrepreneurs, we feel like there's this love and hate relationship with bankers. We feel like banks don't like entrepreneurs or small businesses, right? Because as soon as they call you in when you're trying to get a loan and they're like, let's look through your books, that's when the relationship starts going south, right? With entrepreneurs, right? And it seems like we always feel like banks always prefer almost like the perfect entrepreneur who has their books in the right place, makes a lot of money so they can be able to give them loans, which is not the reality for a lot of businesses, right? If you look at small, I think you talked about, living in Uganda. Somebody was tweeting about that when it comes to Kampala. I think there was something that was changed in the central bank's interest rate. And then one was questioning how, let's say, the person making Rolexes, who basically takes a loan of 100,000 shillings in the morning from someone, and then to buy ingredients, and then they go and they make Rolexes, they make a profit margin, they pay back the loan, and then they make that profit. That's how they live. And one was wondering, there's millions, hundreds of millions of small businesses that are operating that way. And it seems like they're not able to get, let's say, a good relationship with a bank because they're not digitized, for example, or they're not being able to record some of their transaction. So I'm just wondering, you've worked a lot with small businesses. Do you believe that the love and hate relationship is actually correct, or it's a misconception that maybe there's just like a lack of understanding of, the nature of that relationship?
Yeah, that's a really good question, and it's one which in the banking sector we're always grappling with. So I remember when I was in TMEA, there's a time I went onto Twitter and said, I think I'd forgotten about banking. So I posted on Twitter and say, commercial banks have to find a way of sparing a part of their capital to go towards funding startups, right? And I remember getting so many responses. We set up a WhatsApp group because of that one thing that I'd say, because I know a lot of people feel very, very passionately about it. I feel very passionate about that as banks, we have failed to play our role in financing startups. The thing is, as banks, we're really risk averse, and that is the truth. We're risk averse for very many reasons. Number one, because we're using depositors' money. The depositors expect us to be good custodians of their money, so we don't take on risky projects because we want to give our depositors back their money, and the shareholders. And the shareholders also expect a return. So we make very careful decisions when it comes to credit making. And the truth is that with startups, all research has shown that in 3 years, you have only 30% of startups surviving, right? So the failure rate among startups is very high. The answer, and I remember getting this response from my sister when I posted that. I think she thought how quickly people forget, because I know what the challenge is in banking. The answer in financing does not lie entirely on banking. I think for a financial sector or the startup financing ecosystem needs to be a lot larger than banking. You need to bring in venture capital. You need to bring in angel investors. You need to bring in grant providers. You need to bring in people who are probably less regulated and who can provide more patient capital. The problem is that in underdeveloped markets like Rwanda, we tend to put a lot of that focus on banks. So banks need to do this, banks need to do that. Banks will not be the answer to everything, right? But also, I believe we can do a lot more than we're currently doing, right? So I'm not saying we necessarily have an answer to that. I really wish we did. I really, really wish we could set aside, and this is something hopefully as we go along, we should be able to do, set aside, even if it's 5% of your portfolio and say, we want to take a risk on startups, right? But we're also quite heavily regulated. Believe it or not, when you make a credit, right? You make a loan. From the very beginning, you're making assumptions that loan will not be paid back. So you take a piece of your capital and take provisions. Those provisions are hitting your P&L immediately. So there are calculations that bank will make and say, you know what, this is an area we're ready to go into. So probably love-hate relationship indeed, but there's a lot more that we can do to improve that relationship. Yeah.
Who's an ideal, let's say, small business owner for you guys right now, where when they walk into the door, you're like, please, 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 who's that ideal? What do they need to have for them to come to you in need of capital to grow their business?
The number one thing is the movement on the account, right? Because the one thing that shows that a business is alive and is thriving is that it has cash flow. A lot of times it's very difficult for us to make sense of the financial statements that customers are giving us. Oh, I make a profit of X amount of money. If you're making, $100 million as profit, but your account doesn't have the movement, there's no cash flow. They say cash is king, right? If there's no evidence of cash flow, the banks are going to frown. They will just shy away from that. So I think that the number one thing is the bank wants to see that the account is active, that if they give you money, they're giving you an opportunity to scale so that you can just increase your transactions and we can see more cash coming into the account. So a good small business would be a cash-rich business that is looking to scale.
Yeah. So none of that innovation things.
Yeah.
Don't tell us how innovative you are. Show us the books.
I know. Yeah, it's unrealistic.
Yeah. But then that brings up the question that I think we're talking about offline, which maybe that is that nature of banks being very conservative in the bets that they have to make, not because of they want to, but because they're using customers' money. Is that what makes banks, let's say, very vulnerable to new financial technology companies that come up? right? Because everybody when Safaricom launched M-Pesa, everybody was like, this was so easy. Why didn't one bank just think about it, right? And just launch something like this, which would help a lot of people. And now they're making billions every year, and they're big part of the market, or let's say the GDP of Kenya. Um, do you think that's the reason why traditional banks are not being able to catch up when it comes to these financial technology solutions?
Yeah, I think banks have kind of grown too big because they're old, they're set up a certain way, they're highly regulated. We are highly, highly regulated. So with high regulation, there's kind of a limitation on how innovative you can be, right? So regulation is one thing. We run very legacy systems, old systems, where for you to even innovate, there's so much that you need to change because we're so set in the way we do things, right? And then I think because of how big we have been, we haven't done a good job. Banks generally haven't done a good job to think outside the box, right? And we have been fairly resistant to change because for everything that you're thinking, we need to do this. There's so many strong forces of risk, right? That's just a reflection of how much growth you want versus how much control you must have, right? So for every innovation that you're thinking, at the back of your mind, you're thinking, am I going to be in compliance with X, Y, Z, right? My risk acceptance. Do I have enough flexibility to accept this level of risk? Cybersecurity is a real thing. So if I open up my APIs, am I not exposing myself to some risk that is unknown right now? So I think because of the legacy systems, because of how big we have become, because of the mindset also of our people, we haven't done very well when it comes to innovation.
Yeah. What are you doing about that, or what do you want to do about that personally in the bank that you are in right now? Because what I'm thinking right now is it investing directly into solutions that are providing what you're maybe what you want to tap into, similar to how you thought about the merger? Or is it setting up an innovation hub inside of the bank as a department in itself and saying we're going to be working on our own financial technology solutions? So how are you thinking about technology?
Yeah. Our approach is multifaceted. Internally, we are in the process of setting up an innovation department, a department that's just going to think about how, number one, internally we can improve our efficiencies. Number two, how we can serve our customers better and have more customer-centric innovations, right? So that's one thing. But I think the amount of change that you can deliver with that versus the amount of change that you can deliver by leveraging partnerships is limited. So you can only do so much with your innovation compared to how much we can do with partnerships. So one thing we've been really deliberate about is getting into partnerships that will help us scale, partnerships that will help us increase customer or financial inclusion, penetration. So those partnerships are really, really important for us. We are getting into very soon, hopefully, a partnership that will help us to increase significantly our digital lending. So for customers, even who are not customers of BPR, but we can get access to through partnerships. I think digital lending, the example that you were giving of a Rolex maker, right? Probably that's someone that has never entered a bank, but they have, they can do mobile money transactions as an example. So what is it that we can do to help that person access a loan over maybe 1 day, repayable in 1 day, or 3 days, or 7 days, and help them scale their business just because their access to digital loans has been simplified. So those partnerships are really, really important. The other thing that we're doing is looking at our different services and different customer journeys. So for Yusuf as a customer of BPR, we try and map out all the activities or all the services that you get from a bank. So it would be account opening. It would be, receiving money, making transfers, probably doing a trade finance transaction, accessing a loan, and just really critically thinking about how can we better serve Yusuf. Yusuf probably doesn't want to walk into a bank, but he has a phone. Through that phone, can we help him get all those things that he wants? Can we get him a digital card? Can we get him a digital loan? Can he open a letter of credit in the comfort of his office? So save Yusuf's time, save him money by easing access to the services, banking services.
Yeah. Financial inclusion, big problem on the African continent, up there with education, healthcare, and a lot of different things, right? I think I saw one of my friends was a founder. I think it was pitching somewhere, and he talked about 600 million people unbanked on the African continent, right? So again, from your wealth of experience, all these years working in this space, why do you think we have so many people who are unbanked? Is it the banks are not able to reach them? Why is this Rolex maker not walking into a bank and trying to get digitized, and so he can digitize all these operations? What do you think about the problem of financial inclusion? What's the root cause of it, and what can we do? What do we need to do?
Yeah. I think the answer lies, and I'll go to the financial inclusion report that was done in 2024. I don't have to think of an answer. I'll just go straight to what that report told us. So out of that report in Rwanda, we have 8.2 million adults. 96% of those are financially included. So you can assume that, out of the 8.2 million people, 96% of them get financial services, but not, I said financial services, not banking services.
Okay.
Right. Out of the 8.2 million, there's only 1.8 million that have bank accounts. So only 22%, right? And that percentage has remained the same since 2022. So 2022, there were 1.6 million people. Now it's 1.8, but the percentage remains the same because there's the population growth, right?
Yes.
Now, what people said, the respondents to that survey said, was that the reason why they don't have bank accounts is the perception that they don't have sufficient income to open an account, right? And then the second reason was the assumption or perception that banking services are expensive. But then there was also the fact that banks are far. They're not easily accessible. And they're right in all those things, right? Number one, there's a sense that affordability is not there. So we know that 38% of our population lives below that poverty line. So they earn less than $1 a day, right? We have accounts where, on average, banks will charge 1,000 francs for account maintenance fees. So you think about that, and your average Rwandan will not want to pay for an account. Why would they want to pay, get 1,000 francs of my little revenues? What's the value add, right? So I think the number one thing that we need to do as banks, and I know somehow we also have an account where it's free of charge, right? You're charged for per transaction, but not for account maintenance fees. So just removing those fees, number one, but also increasing accessibility. And I think one of the ways to improve accessibility is enhancing our agency banking. I think this is something that banks have done really well, but we probably need to work on interoperability of our agency banking, because you go into the villages and, you get to a shop and there's like 5 different banks that show is, an agent for. So we probably need to just have some interoperability so that, an agent can operate and serve any customer, right? So agency banking to improve access and removal of those fees that give the perception that banking is expensive. But I think it will take time to change that perception, especially if you have options that appear less intimidating. Banks have been intimidating, right? Walking into a branch and, you have 4 tellers and you're a farmer, and it comes off as quite intimidating, right? So how do we remove that perception? I think is the headache that all of us have. We also need to ease access to account opening because the most basic service that you'll get from a bank is a transactional account. So, just thinking about how, for example, somebody can open an account by using a USSD code. But the other thing is also banks have been struggling with this one thing, and I would love to hear from you. How do we fight this one thing? We have a lot of accounts that go inactive, right? So you open accounts, and very many banks will tell you we have in dormant accounts to the extent of, say, even 40% dormancy, meaning the account is open, but it hasn't been operated for 3-6 months, right? So that means that somebody is opening the account for probably just one thing. They get that one service and never use the account again. Why is that so? I would love to hear from you, actually. How can we get people who have accounts with us to actually use the account?
To use the
right?
account. I think it's because what I'm thinking about is that a lot of those people, they might not use their bank accounts, but how much are they using their mobile money account, right?
Yeah.
And I think they're using their mobile money a lot more, right? And I think what a lot of these technologies, right, not just the MTN mobile money, a lot of the technologies that, are very accessible that we use on a day-to-day basis, what they did is that they made it very easy for me to be able to transact anywhere I go. So if I go to a restaurant, they just need to say, we accept this. And then I'm like, okay, great. I can just pay right away. And I've opened accounts on so many other, let's say, fintech products, right? Which are great. But then what I realize is that I cannot use them a lot. So wherever I go, it's like, do you accept this? Oh, no, we don't accept that. So then I'm like, okay, that's a limitation for me to be able to transact here. It happens a lot even when you travel. If you go to a country, that's the reason why Forex bureaus in different airports make a lot of money, is because some countries you go there and you have a card and it's not going to work, or you want to go to, let's say, a deep rural place and they don't accept cards, so you need cash, right? So then what I've seen is that a lot of these other fintech products, the ones that are getting a lot of traction, what they've been able to do is that they are there. Anywhere you go, you know that you're going to find somebody who's going to accept that payment. And I think that's probably what makes us use them a lot more, because I'm like, yep, you can pay me on Momo, because I know I can pay almost anything in this country on Momo. Anywhere I go, somebody will accept it, right? But and I'm like, maybe, and people can use cards, right, for banks, right? But then I'm like, are we marketing as well and saying you can use your BPR card here? That's much, it's in my face, it's on the menu or it's somewhere. Then I'm like, I'm incentivized to use that more. Otherwise, you just see people transacting on their bank accounts and then withdrawing and putting on Momo, right? And then the transactions happen there. So I'm like, that's what I was thinking about, because I have a friend who's building a fintech as well in that space. And I was like, the biggest thing you're going to have to fight with is people just keeping money in your ecosystem.
That's right.
And not taking it out.
Yeah.
Right. So yeah, I don't know if I have a very solid solution.
I see what you mean. But I also believe that even while we're grappling with this, yes, there will always be a space for banks and there will be space for fintechs, right? So there are things that banks offer that fintechs will not be able to offer.
True.
And there are things that fintechs have the flexibility to offer that banks may not be able to offer as seamlessly. So fintechs, for example, I find, correct me if I'm wrong, but most fintechs are very niche, right? So a fintech will come and they're facilitating payments and collections maybe, but they're not able to do, say, trade finance. They're not able to do lending. They're not able to do X, Y, and Z. Banks, on the other end, you're able to get end-to-end services. You're able to get collections, payments, trade finance, cards, loans. It's a wholesome experience in banking, however inaccessible they seem to be. The other thing is also the fact that as banks, it's not a perception, it's a real thing. Stability, right? You talk about a bank and you're thinking, my money is safe there. So my question to you is, if you had a mobile money, wallet.
Yeah.
You don't want to store so much value there,
Yeah.
right? So you get value, but you want to see to sweep your money into the bank, right? So I think slowly as we go along, in fact, not slowly, we know there's space, there's room for a bank, the things that the bank is going to do. And this is why, for me, I think the real game changer is in how we can get into strategic fintech partnerships. To say, for example, if I'm not able to seamlessly or efficiently or affordably give digital loans, small loans especially, because my transaction costs are high, but there's a fintech that's coming in that I'm able to, one, probably provide the capital to. And then what they're bringing on the table is a platform that helps us to affordably give these digital loans, get it to a partnership. I don't have to necessarily have 5 million accounts, right? If the fintech is giving me access to 5 million people, right? So those partnerships, I think, are the future. I think there's a love-love relationship between banks and fintechs, and the future is just deepening these relationships more and more.
Yeah. I think I just thought about a potential idea to increase, people not having dormant accounts. What I'm thinking is that another challenge that I see with a lot of bank accounts is that if banks were able to literally put in your face in one of their mobile apps or internet banking your credit score, right? Based on how you transact. So it's essentially encouraging people to transact within, using the bank or, within the bank. And I don't know, gamifying it, giving me points every time I do it. And it's very visible. It's like, hey, congrats, you just did this. Similar to how Rwanda Revenue congratulates you when you pay your taxes on time. So something like that, where it's like you're encouraging people to transact a lot more, inside the bank. And basically you can show them that based on how active you are, these are the things you are unlocking.
Right.
These are the benefits you're gaining. So keep on doing this. So then it becomes more like just like fitness apps and stuff. It's like, oh, I don't want to break my my record. So I have a very good record. Let me keep it by continuing to transact here. So I'm incentivized, not directly by money or whatever, but more like it's gamified. I'm gaining points and I can see it clearly. Not because right now, even though I transact, let's say with BPR, I have to go to the bank and ask them, so based on what you've seen on my bank, what do you think I'm eligible for? I have to like request that information. But if you can just provide that to me, I just see it. Maybe I can't do much with it, but I can see it. And I'm like, oh, based on, I've done 5,000 transactions. That's amazing. I've earned 5,000 points. And these are the things I'm unlocking because of my day-to-day transaction. So I think that could also help people to, use their accounts a lot more, because there's a need to do that.
Interesting.
Yeah, I think that could be an interesting add-on as you're working on the mobile app. Incentivize us to use the account. Otherwise, we don't see the point of using the account. We just think, oh yeah, let me just maybe put them in savings, which is great for the bank.
Yeah.
But let me transact it on a mobile wallet where I can just transact quickly and pay people very easily. But I think actually, so another great thing about BPR is your net banking or internet banking, web app actually makes me not want to transact the money on mobile money. I always prefer to still make the transaction by using the software and, keep transacting in there because it's so easy and so good. So, it's definitely making me use it a lot more because it's so easy, very user-friendly, not too many steps, very, I can see my dashboard very quickly. It's so good. So maybe if the mobile app also has a couple of those incentives for us to use the account, I think it will be a game changer as well. So that might help, maybe.
Very good feedback. Really appreciate it. There's a lot for us to think about. I think also probably traditionally banks have kind of been, reluctant to change because it's almost like the market is always there.
Yeah.
Right? We haven't.
It works.
It works. It's so simple. And it was, we have to challenge ourselves a lot more than we are right now. And I think this is one thing that we're really aware of. How do we push the envelope more, right? Because you look at the 22% that we're talking about is, the same people that are basically just going from one bank to the other. Either they're multi-banked or they'll move from one bank to the other because one bank has bought out my credit. We're not doing a good job to expand that 22,000. So we're working very hard on, what is it that we can do differently. So the feedback that you've shared is very, very important. And you'll be seeing changes coming.
Yes, please, please. If I was to speak to 3 team members who work very closely with you every day, what do you think each one of them, what's the word that they would use to describe you and your leadership? 3 of them, 1 word each.
Wow. This is a difficult one because I think that as humans or as leaders, we have a lot of blind spots. But I would love for them to think that I'm accessible.
Okay.
Like, you can walk into my office anytime. You can walk to me anytime, tell me anything, ask me anything on WhatsApp. So accessibility. And for me, that's something that I want to represent, even to not just the team that I lead, but the entire bank. There was a bit of a leadership, I don't know the word for it, but when people feel like the leaders are too far, there's a bit of that. When I joined the organization, like, oh, it's the MD. When you get into the lift, oh, it's the MD, and people take a step back. That's something I really do not like. I want people to know that I'm accessible. I'm just like everybody. So I would want for them to say I'm accessible.
Maybe on that one,
Yeah.
I think 2 things. Number 1, I think sometimes it's people themselves, or maybe how they grew up and maybe where they were working previously, and they bring that to the job.
Yeah.
And they just feel like, oh, my boss is my boss, so I need to give him this kind of, put them on a pedestal. But also on the other hand is also, as a leader, I would love to learn from you. What do you do to make it look like you are accessible and make it, very clear that I am accessible? Because I feel like sometimes when you see that, you have to do extra steps to, guys, I am here, or, when people come to you, like, how do you, how do you make it, how do you make them feel that?
So I think there are really practical things that you can do.
Yeah.
Number 1 is eye contact. I see you, I look at you, you know that I see you.
Okay.
And I recognize your presence, right? Number 2 is just having conversations with everyone, right? So I think at one point, actually, people just wanted to run away from the lift because I could not stand being in a lift with someone and we're just looking at each other or each one is on the phone. No, because it's a large organization. There's 1,000 staff in BPR. So almost every day, I'm still meeting new people. So I'll get into the lift and I'm like, I do smile, Yusuf, so at least I'll make an effort towards, remembering your name. If it's the first time I'm seeing you, I'm like, what's your name? What department are you in? What kind of challenges are you currently dealing with? So I like to have conversations with people, and it just takes away a lot of the tension, so just picking up conversations with people, in meetings, making people know that I can be challenged. That's also another thing I think I would love for people to say about me, that I don't have all the answers. And I do not like the perception that what the boss says goes, because then you make a lot of mistakes.
Yeah.
So I've tried to make it clear that respectfully, we can challenge each other, right? So that I think also takes away that, the boss is the boss kind of thing, right?
What would you do practically to make that clear? Because it's all still a challenge as well. Even if you say it, people will be like, yeah, you're saying it, but, I don't think that is enough for us to open up and really challenge you. So I'm like, what else would you do?
Change takes time. And now that we're seeing that, it was just beginning of this week, I think Tuesday, we're having a meeting and we're arguing about this thing. It was a regulation that was being developed, and we're discussing in the meeting our interpretation of that regulation. And everyone had a different perspective. So at one point, I'm also sharing my perspective. And then somebody who had been listening, one of us who's been listening, is saying, Andy, I'd love to talk to you after this meeting about it. I'm like, no, we are discussing this issue. You can air your views. It's like, no, I have a different perspective, so I'd love us to talk about. So I respected them for that, because I think you can't force people to change. Our upbringing is different. The kind of communities in which we were raised were different. I was raised in a community. I mean, in the nuclear family, my dad was a teacher, and my mom had also done some teaching, and we used to argue a lot. I challenged my mom, I challenged my dad, and it was okay. So I remember my sister and I having a conversation and saying, you know what, I think we need to make some adjustments because the environment is a bit different. You don't challenge your boss. And even when it's not challenging, or if you have a different perspective, there's a way you air it, which is different from how we used to air it at home. Like I could easily say, no, daddy, that is not true. And it was okay. It's not the case in our current environment. So I think slowly just letting people know, I want to be challenged. I don't know all the answers. Please, let's have a conversation so that out of that conversation, we can just get to a point where we develop we get a solution. So yeah, I would want to be known as a leader whose opinions can be challenged and that I am able to change my mind.
Yeah.
Right. Yeah, I would also want to be known as a leader who helps to bring out the best in people. Yeah. So I hope somebody would say that. That I challenge them to be the best version of themselves, and that I empower people to be the best versions of themselves. Yeah.
Interesting. Another aspect I think that might be able to help people know that the boss is approachable or could be challenged. I think I like to follow a lot of leaders, and I think was it Jamie Dimon who say that, or one of top leaders of either a huge bank or one of the big companies, where they talked about they like everybody to come prepared for a meeting. It's like notes are going to be shared, like let's say the night before, a couple of days before, and everyone has to read them because the meeting is not going to be about updating or doing anything. It's going to be about decision making. It's about everybody knows, what we're supposed to talk about here. So I want decisions. And then you start the meeting off with, so what do you think? And how do we start from there?
That's a good one.
So that was very interesting. And another one that was interesting was, I think the CEO of NVIDIA, who say that he doesn't have any direct reports. And he says that he has 40 people who reports directly to him. And he says that I don't believe in one-on-ones. Like I believe that everybody should be on the same page. So if there's something I need to say to one of my managers, everybody needs to know about it. So if it's good feedback, bad feedback, everybody has to be there. 40 people in the same room, everybody has to be on the same page so that there's no silos of information where it's like some people have more information than others in the organization, which I found very interesting. What do you think? I mean, you lead 1,000, close to 1,000 people.
I do, and I have 15 direct reports. I think there's feedback that needs to be one-on-one. If I want to give you constructive feedback about the way you do things, about your approach, why would I say that in front of 15 people? I believe in one-on-ones so much. I believe also in an environment where information, not everyone has to have the same amount of information by virtue of the environment we operate in. Data protection, consumer protection, all those things are things that, determine the way we work. So there are a number of things that don't have to be shared, including feedback that's going to help somebody improve. I wouldn't give that feedback in the open, right?
Yeah.
So one-on-ones I really love, and I think are really, really important because then you also get to give me feedback. Because you're not going to give me feedback in permanent, right?
Yeah.
So at what point are we going to give each other constructive feedback if it's all public?
All public. I think his point was more like, because I want everybody to know what I care about, and I don't want to have to repeat myself all the time. So I'm like, I care about punctuality. I care about this. It's like, okay, everybody, I care about this. This person, you did this and you did not do it on time. And it's a value, it's a culture that I want to build. And all the managers needs to know about it once so that nobody is going to repeat that. And,
Guess what? I believe that if you're going to have a culture change, repetition is unavoidable. You're going to have to repeat your message over and over and over again. Jeff Bezos is the one who almost in every interaction or any interview that he'd be in, he talks about Amazon as a customer-centric organization.
Yeah.
He doesn't have to, right? But because he wants to build that culture, I think it's really, really important to repeat. If in Kinyarwanda, I think we have a saying about that. I don't want to kill it, but it's something about, you have to repeat the message for it to become ingrained. So for me, for an organization like BPR, which has just recently merged, repetition, I could tell it. I say the same things over and over again until we get to a point where all the 1,000 people will know that when it comes to customer service, this is the things that we're not going to have a conversation about. Customer service, the customer comes first. You say that over and over again, and I'll never get tired of repeating.
Yeah. Work-life balance. Do you believe in it?
I'm such a, that's, it's a fail for me. Terrible. But I think it's very important. I believe in it. I probably believe in work-life integration more than work-life balance. I believe in enjoying my work so much that I could do it unknowingly, so it doesn't feel like work. But banking is work. You have to feel like you're working. Apart from when you're solving a customer's problem. My approach to it is to think about myself as a wholesome individual. So it's not just patience, the physical. Patience starts with the spiritual. So the spiritual aspects are really important for me. However tired I am, Sunday is a must. I have to congregate. I have to fellowship with other believers. And that just feeds into patience. That's number one. There's the relational part where I get energy from people. I want to relate with people. Friendships are really important. So I invest in my friendships. Not enough though. I've done very poorly on that. Yeah. So I can go weeks without seeing my friends, which is terrible. But when I see them, it's like so energizing. I get life from that. There's the emotional, just making sure that my emotions are intact. There's the mental, am I challenging myself to grow? Am I learning? Am I, getting out of my comfort zone and learning something that I do not know. And then there's the physical, of course, which I'm also doing very badly on. Just walking, enjoying. At one point I tried gym fails. Try walking. Walking is standard. I enjoy that. Podcasts, that's a really relaxing time. So that's what I do to take care of myself. When I went into BPR, I gave myself that grace. I said, you know what? I'm going to do this very badly because I know the challenge that I'm taking on, but I'm ready for it. For 2 years, I know, at a very minimum, until XYZ is done, I'm going to have a very poor work-life balance. I prepared my boys, say to them, I'm taking on this role. This is what it entails. Do you think I should do it? Talk to my husband about it, said I need you to be more present than I will be because I know this job is just going to take up my time. So yeah, that's my view of work-life balance. I think that you should never be pressured to do things the way everyone else is doing it. Do it your way. Sometimes you'll feel good about your progress. There are times when you feel like you're making no progress at all. To give yourself grace.
Yeah. Any tips or tricks? Are you 6 p.m. my phone is off kind of person? If it's not in the calendar, it's not happening. What are some of those small little tips for productivity that you've seen succeed?
So those two examples you just gave, like I am the exact opposite of that. I'm so adaptable. Like I would get called into a meeting, and if it's very important, if I think it's going to help me move the needle from here to there, I will be as flexible as possible. I could walk into a meeting at 10 p.m. As long as it's going to help me solve a problem, I will do it. So I'm not yet at that point. I don't have that discipline yet. But few tips I would say just doing a bit of meditating before I start my day.
Okay.
That helps me to clear out my mind and think about, and meditation for me, it's prayer and meditation, right? Thinking about the day ahead, thinking about how I want to control my emotions, thinking about how I really want to relate with people, thinking about the tasks I want to prioritize, and that will determine, my day. Otherwise, I think banking, because you're working with customers, and customers who mostly come to you not because they have solutions, but because they have problems, it really calls for you to have a level of flexibility that you probably don't require. We're almost like doctors, right? So you can't have a doctor switching off their phone at 6 p.m., right?
True.
That accessibility is really important. A doctor's day is very erratic because you have a customer or a patient walking in with a crisis. It's the same for banking. So by virtue of the work that I do, that structured approach to productivity hasn't been there. But also because personally, I'm a very flexible person, very adaptable. It has helped me to survive. But with a lot of burnout, there are times when it feels like, can I go an extra hour? And guess what? You'll go another 5 hours and you're still surviving. So yeah, I don't think I'm the best person to give tips on.
You're scoring 4 out of 10.
I'll get better. I just know that it's going to get better with time.
Yeah. Ever thought of being an entrepreneur yourself?
So I had my little experience with entrepreneurship, again, because I like problem solving.
Yeah.
When I moved to Rwanda, one thing I noticed, because I was in the formal workspace, is I realized it was very difficult to get formal clothing. So I had my little phase where I used to get clothes from, like work clothes, suits from the UK, and come and sell them to my friends and make a lot of money, like double, profit, right? But out of the boot of my car. When I was a little kid, I was very artsy. So I'd make bracelets and sell them. My brothers used to help me to sell them. So I think I have a streak of entrepreneurship. So I think my approach to entrepreneurship is, where possible, support existing businesses, support people who have great ideas. So I'm currently part of a group called Rugori Investment Network. And what we're trying to do in that network is it's a number of women in the financial space who are really passionate about women, financial inclusion for women, right? What we want to do is to support women-owned and women-run businesses that are small in nature and have scalable ideas and want to move to the next level, and to invest in them. So it's been in existence for almost 2 years now, if not over 2 years. We're doing some work and, looking to scale it. So we've got some partnership with the MasterCard Foundation, and we're looking to scale that work even more. So my approach to entrepreneurship for now is going to be support, investing existing businesses or people with great ideas.
Nice. What would be, from your experience in the financial space, what are some of the problems that you still see happening that you would love to see entrepreneurs tackling? Could be problems that you're facing from as a bank, or you notice in the market and you're like, I wish somebody was working on something like this. It would be so helpful in maybe getting more people financially included, or, bettering our lives in Africa. Doesn't even need to be in finance, actually. Could be something you've observed from your experience. What are some of the problems that you're interested in?
So the one thing I'm very passionate about is businesses and small businesses and helping them to move to the next level. Actually, the times I've thought about entrepreneurship, I've thought about getting into business advisory services, because I think most entrepreneurs fail because they have a great idea, but they're not able to build systems to help them focus on building the idea and scaling it and, expanding their business. So how to support businesses to move from that formative level to where they can scale their businesses, I think is something that I would be really, really keen to support. And the reason I think I find that very interesting is that the one thing that gives me a headache is employment and job creation, and the fact that we have so many young people on the streets looking for work. They have grit, they have the energy, they have everything it takes, the willingness, but they're not able to find work. So I think that the answer to that is really driving the entrepreneurial spirit so that we have many more people building businesses that can then employ people. So that's a problem I'd really love to be able to solve.
Interesting. Very interesting. Where are you going? You started off in banking, went into trade, facilitating trade, came back to banking. What are the next 10 years looking like for you?
I'm in that phase, and I'm not like a long-term planner. Like, I'm not the kind of person who will tell you in 20 years I want to be here. My planning phases are like 3 years, 3 years, 3 years. Like, I know that for the next 3 years, I just want to build BPR to be the best bank in Rwanda, the bank of choice for people, so that when you're thinking about opening an account, getting a service, a loan, BPR is the first name that comes to mind. So that's where I am right now, just focusing on building this bank that once I'm out, I know I built a legacy. So the next steps really will depend on what the next 3 years will look like, because I believe in plans unfolding. I believe in just things unfolding depending on where you are, because I kind of get bored very quickly. So it's very difficult for me to say in 10 years, I want to be doing exactly this. Yeah, but I believe in 3 years, the picture will be a lot better. But for now, it's really building BPR to that level where I can know, I left a good legacy.
Yeah. Patience, thank you so much. I've learned a lot about you, about the work that you are doing at the bank, and what are some of the plans that you have in terms of integrating technology. What are some of your thoughts on financial inclusion on the African continent? And I believe that a lot of people are gonna enjoy our conversation. So thank you so much for making the time, and we can't wait to see what you're gonna do with this bank.
Thank you so much, Yusuf. Thanks for having me. I know you've had really interesting people on the podcast. So for you to have considered me, I take that as an honor. Thank you for having this conversation with me. And let's continue it. As my perspective, my perspective might be different a few months or years down the road. So we can continue the conversation. And I wish you all the best as you continue to grow it. May you continue to touch lives. I think the work that you're doing is really important and impactful. So keep doing what you do.
Yeah, thank you very much. Let's get to work.
Sure. Thank you, Yusuf.
All right.